PulseChain and PulseX have the potential to make many people rich, but generally speaking, if one person makes money, other one has to lose, right? In fact, the statistics say that the average crypto investor makes around $111,000 per year. Of course, these numbers don't feel so realistic considering what we experienced in the last 8 months, but the downtrend not gonna last forever, and 100x opportunities will come back soon, and you could turn $1,000 into $100,000. But why do you feel that you only lost money in crypto so far, and if you earned some, they are not as much as they should be? Well, apart from most likely you joined the crypto space only last year and you didn't have the chance to buy in the bear market so you can make those gains after, there are a few other reasons that separate the ones that lose money or make some tiny gains from the ones that really make generational wealth over the course of 2-3 years. And one of them is the strategy. You don't need tens of thousands of dollars to make hundreds of thousands and even millions. You just need a few thousand, and you need to make a very solid plan and stick to it without letting your emotions ruin your portfolio. And what do I mean when I say a strategy and a plan and all that? Well, this is what you're supposed to do when a certain thing happens on the market. If you buy just because the price goes up or sell because your investment is down 20 or 30%, you are basically acting emotionally and trading, and the outcome will not be in your favor. Also, buying and holding forever not gonna give you the best returns, as most people lose their sense of selling as they think the price will keep going up, but they actually miss the top. Of course, aiming to buy the bottom and sell the top is quite foolish, so that's not what I mean at all. Buying around the bottom and selling around the top is what your goals should be, and if you buy and the price dropped even more and sell but continue to pump, you have to be perfectly fine with that and never feel bad about it. In terms of PulseChain launch, I want to actually give an example with Ethereum, as we know that PulseChain is a hard fork of Ethereum, and I think it makes sense to compare it with this coin. So Ethereum launched way back in 2015, and if you participated in the ICO, you could have bought at 31 cents, but let's assume you didn't because you haven't heard about it before, or you just didn't want to take the risk and you wanted to see how the coin will perform, if it is a scam, and if everything looks good, eventually to invest. So it's launch day, and you see that the price doesn't go below 31 cents, but it's actually pumping. You have $1,000 to invest, and you decide to put them in around here, let's say at around $1. Bear in mind that 100% is actually 2x, so 200% is 3x and so on. So the price of Ethereum goes up to $3.50, and that represents a 3.5x return on your investment. So with your $1,000 invested, now you have $3,500. You are not a trader, and you don't want to sell every pump and buy every dip because it's dangerous, and you prefer to buy and hold and not check the price every half an hour. So you didn't take any profits at the first pump, and now the price starts to go down, and it's actually going down for almost 3 months, and making almost 90% loss for the people who bought the top. You bought at $1, and if I measure from $1 to the bottom, you would face around 60% loss, and your $1,000 will be worth around $400 now. Of course, you are not worried about that because you're a long-term investor and you can't be bothered by any short-term price movements. So you hold your $1,000 investment and you just wait for the bull run. After a couple of months, there's this pump that sends the price to around $15, and that represents 15x for your investment at $1. Most likely you're not gonna sell because you are here for the big gains, and $15,000 is definitely not what you're aiming for. So after this pump, the price goes sideways for quite some time and even drops like 60%, but after that it goes for a second leg up, and now your investment of $1,000 is worth around $50,000. You're still not satisfied because you see very big upside potential, so you don't sell. After a month and a half of sideways action, the price starts to pump again, and you start to see 6 digits when you open up your portfolio, and the numbers grow quite fast, going from 100k to 200k in 1 week. You are super excited at this point, as you see that you're basically making $1,000 a week, and in a couple of weeks your portfolio is now worth $400,000. You know it's growing that fast because you invested very early, and if you sell now, the growth will be significantly slower unless you invest a substantial amount of money, but the risk will be higher if you do that, and if you just hold would be better. So you don't sell again because you see the potential to make your first million, and this is once of a lifetime opportunity. However, many people took some profit and crashed the price by around 60%, but the price quickly recovered and starts to move up again. Your portfolio at this point is going absolutely crazy, and without a significant move to the upside, you are making so much money that you actually made your first million now, and you start to think that 1 million is a lot of money, but they actually won't be enough if you don't want to do anything till the rest of your life. You know that this is once in a lifetime opportunity, and you've been on the market for only 2.5 years, and if you wait for another 2-3 years, you can make that generational generational wealth that only the long-term holders make. Of course, many people would disagree with me and say that if they are up 100,000% and they made $1 million, they would sell at least some of it. Well, I want to keep everything very simple because of what I'm going to show you after this, and it will all make sense, so please bear with me. So you are holding over $1 million here, and maybe you expect the price to continue go up, or maybe face a small correction and eventually continue the uptrend, but we actually head straight to the bear market, and you gotta wait 3 years until you see these prices again. You eventually made it through the highs and lows, and of course you couldn't nail the top, so let's say you sell around here. So that's like $3 million out of $1,000. And even though you wish you could have done much more, you are happy with that, and in 3 years and a half you made $2 million. Of course, this is one very simple scenario, and you could have been in a much worse situation, considering that the price could actually not make it to its previous all-time high. And this is where the good strategy comes into play. If you hold through bulls and bear markets because you bought early and you're not a trader, you are actually exposing yourself to a much higher risk, because you don't know what life will serve you tomorrow and what the situation in the world might be. I can bet that no one expected that literally every single country in the world will close their citizens in their homes, restrict businesses to operate, restrict flights, and so on for months, for many months. No one expected that this might happen in the 21st century, especially because of this reason. Now we have some bad stuff happening in Ukraine, and we have no idea how this will end up. All the money that has been printed in 2020 and 2021 so the economy can survive, now is making the economy collapse, and we don't know where we might end up in this aspect as well. Also, generally you have to be very cautious and expect that anything could happen in the next 5 years, so don't take anything for granted. I've said this many times, but I will say it again. You must have a bullish plan and a bearish plan. You can't just go all in because you believe in the project, or you believe this will happen or that will happen, when you don't know how the world will look in the next couple of months. So what I would do instead, but before I actually show you, I want to clarify that this is just a simplified example to show you that buying and holding for many years is not the best strategy, and it will not give you the best returns. I'm not gonna complicate it with dollar cost averaging and all that, and I'm just going to show you one plain example. So I'm gonna work with $1,000 again, and generally I would separate them into different percentages so I can enter the market with a certain amount in the beginning, so I have exposure in case the price doesn't go back to these levels, and I'll put the rest of the money when we see correction on the price, and I'll DCA on the way down. But for this example, just to keep it simple, let's say I put my $1,000 all at once at $1, like I did for the previous example. If the project is good, the launch usually plays out very similarly. We have an initial pump on the first day, and then a decent correction after that. Only the numbers are different. Some projects pump more than others, and some dump more than others. So I put $1,000 at $1, and you usually won't time the top perfectly, so let's say I sell at $3, so that's 3x. At this point I have $3,000, and I don't care if the price goes up to $5 or $6, because there will be a pullback after the pump, and I could have a chance to enter the market below my initial entry of $1. As I said, don't aim to time the bottoms or the tops. You will make as much money if you just buy around them. So what I was going to do in this case is to split this $3,000, and when we go below $1, I'll start a dollar cost average. But to make it simple, let's say I expect around 80% pullback, and I put everything at, let's say, 60 cents. Now the price drops another 30%, but I'm not worried about that, and if I have money to buy the dip, I'll buy it, but in this case I will just hold, and I won't be bothered that I didn't invest 30% lower. So what comes after this is a pretty decent 25x, so my $3,000 is now worth $75,000. Now, buying and selling all depends on the current market conditions, and I give an example with the chart of Ethereum, but I want to make it relevant to the PulseChain launch. So if PulseChain, let's say, launch before the bull market, and we see the pump, then we see the correction, and we are already in the bull market, and we see this move to the upside, you have to pay close attention to many different indicators that could give you a very good estimate for the top, so you can sell around it. As we can see, this is Q1 of 2016, and if I pull the Bitcoin chart, we can see that Bitcoin was basically going sideways at that time, and Ethereum was moving on its own. So if PulseChain does this, I wouldn't sell after this 25x pump, because yeah, we might see a pullback and good buying opportunities, but we could also not see a pullback and miss the gains after. So if you take the risk in this situation, this is what I consider trading. So in this case I won't sell, and fast forward 1 year later when we enter the bull market, and my portfolio starts to grow exponentially. So in the next couple of months, my investment of $3,000 will go up to $1.3 million. And again, I don't measure to the top because we most likely won't sell at the top, and if I measure close to this top, my $3,000 will be now $6 million. But keep in mind that it can also be only $300,000 if the price price actually doesn't go up anymore and it drops back down. So what am I gonna do from here? I know that bull markets and bear markets don't last forever, and clearly being in a bull market for a couple of months, there is a bear market ahead, and probably in the next 1 year, the price will drop slowly but steady, with a few fake pumps here and there. So I'm just gonna wait, enjoy my life and work on my businesses, and once we got into these levels of 80 to 90% down from the top, I will consider getting back into the market. Again, I won't aim to buy at the bottom, and I'm gonna take an average price of $130, and I'll have a chance to buy at this price many times and not just the first time we reach it. So I think it's a reasonable pick for this example. Now, we said that if you invested $1,000 at $1 in the beginning and you didn't sell till now, selling around the top of this bull market will make you around $3 million, right? However, I have $1.3 million in cash realized profit, and let's say I will invest half of this money because I don't want to take too much risk, or maybe I spent the other half already, or I'm planning to spend it for something else. It doesn't matter really. So $650,000 would be the amount I'm going to put at $130. So if I sell around the top again, that would be roughly around 20x, right? And so $650,000 times 20, that's $13 million. 13 million. And again, how much you were going to get if you put on the first day at $1 and you didn't sell for 6 years? 3 million, right? So I'm not just diminishing the risk by taking profits when I see a good opportunity, but I also make 10 times more money than what you would get if you hold through the highs and lows and take all the risks associated. And I want to quickly show you what I'm actually talking about. So I took $1.3 million profit from the first bull run, and half of it I put on the side, and I invest only the other half. When I put those $650,000 to buy the dip, and let's say unfortunately the project doesn't do what I think it's going to do, and instead of surpassing the all-time high, actually keeps going down from where I bought. Let's say I will sell at 50% loss at $65, so my investment will be worth $325,000, and my total profit will be $975,000 if I add the other half that I didn't invest. But if I invested on day one and I didn't sell because, you know, I am not a trader and I prefer to play it safe and only the long-term investors make money, my investment of $1,000 will be worth $65,000-ish. So at some point my portfolio was worth $1.4 million. So the hypothetical loss from $1.4 million to $65,000 is $1,335,000. And the loss if I was taking profits from time to time and investing back into the market on the dips would be 50% from $650,000, so $325,000. So I think it's pretty obvious who is taking the bigger risk and also making more gains. Of course, this is just a super simple and basic example that represents the difference between hodling for many years and taking profits in the bull market and reinvesting in the bear market. Also, because this video is about the launch strategy of PulseChain, I want to highlight that a crucial part of this strategy is the beginning of all this. Because first, you have much more capital to work with when you take profits from the initial pump, and second, you get a much lower entry, which is absolutely game changing. Now, many people will say that this is trading and gambling, and if people do it, they will mess up and all that. And here I want to say that I don't push anyone to do this, and I don't say that if you choose to buy and hold for 4, 5, 6 years, you're a loser and you should always choose the second strategy. If you don't feel comfortable with this, just don't do it. The purpose of this video is to represent the difference between hodling and taking profits when it's a good time to take profits, so it shows you both perspectives if you are wondering what would be better for your investment strategy. Of course, I worked with only $1,000 in these two examples, and Ethereum performed absolutely insane, and it's easy to make those gains. However, I believe many people have much more capital to work with in the first place for the PulseChain launch, and we don't know what the numbers will look like for PulseChain, and of course would be great if they're even close to these, but I hope you realize that the numbers don't matter, it's all about the principle. And with that being said, I hope you like this content and appreciate my effort to show you different perspectives so you can make your own strategy and decide what will work the best for you. So I would be very thankful if you gave the like button a gentle tap to support my channel. Also, if you don't want to miss any future videos, consider subscribing to my channel as well. I will continue to provide unique content that you can learn a thing or two. Thanks for watching, and I'll see you in the next one.